Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Market Academy. Let's go and get started. Take a look at today's price chart. Again, just kind of scanning price charts, basically like this. I got a technique that allows me to just, look at chart after chart after chart after chart very, very quickly by just hitting the enter key on my keyboard. And what I'm doing when I go through that process is just simply looking for charts that have interesting structures, interesting wave patterns, or just something that I recognize. Now, this kind of caught my eye for several reasons, because if you look at the decline that was started back in 2023 here, you clearly have a down, up, down sequence. And then you got this mess, which basically lasted 12 months into late 2024. And then you have another down, up, down sequence. And then what appears to be taking shape here is that, remember, that wave of equal or greater weight in the opposing direction. We talked a little bit about that on Tuesday. So I think what's going on here from an LA wave perspective is just simply an extended correction or a complex correction. A, B, C for W, contracting triangle X. A, B, C for wave Y. So in other words, the corrective or counter trend move that began back in 2023, I'm identifying as complete at the low that we've seen thus far in 2025. Now, if we drive down to the smaller time frame going from weekly to the daily price chart, I do like the price action we've seen so far. Up off that low back in June, 1, 2, 3, 4, and 5. Nice little acceleration gap in wave 3 of 3. And then from there, I believe we have an expanded flat, A down, B up, and this little sucker right here, what we've seen during the month of September, looks to be an ending diagonal, okay? So that being the case, I think, again, keep in mind we have earnings coming out, I believe, next week sometime, so it may be prudent just to kind of stand aside on this until after earnings. But if everything goes according to plan, we've got 5 waves up, 3 waves down, and we'll be looking for this wave 3 to pretty much evolve into Q1 of 2026, where we see prices get into that 180, 185 handle. So again, whenever I'm looking at these price charts, I haven't shown this in a while here, but remember, this is the template I work with. These are the 5 core foundational patterns which make up the wave principle. Everything that we know about the wave principle, it starts here. It's built upon these 5 specific patterns. Now, each pattern, the impulse wave, the diagonal, the zigzag, the flat, and the triangle, each pattern has its own unique set of rules and guidelines. If you do not have Elliott Wave Principle, written by A.J. Frost and Robert Prechter, I highly recommend that book, that treatise, because there's no other better work out there on the wave principle than what Robert Prechter did. But these patterns here, again, this is what I'm looking for when I'm looking for a price chart. We're looking at a market. So for example, going back to Pepsico, ticker symbol PEP, this move here, again from the June low, 1, 2, 3, 4, and 5. And again, what do we know about wave 3? Well, if you're going to see an acceleration gap, that's what occurs here. So up from the June low, we have this formation. We have that impulsive advance. And then from there, we have the expanded flat. Now, an expanded flat is nothing more than a variation of the flat pattern, which you see right here in the middle. And the reason we call it an expanded or an irregular flat is because wave B terminated beyond the wave A origin point. And then as far as the wave C decline, well, that's the ending diagonal, okay? This is the ending diagonal in a bull market, and what we see in Pepsico is an ending diagonal in a bear market. And remember, ending diagonals act as a terminating wave, which is why it can only occur in the 5th wave position of an impulse wave or as wave C of either a zigzag and or a flat correction, as it is in this case. Just keep in mind, again, that as we get deeper into the month of October, earnings will come out. So we'll come back and ideally revisit this and see if is price action adhering to the operative Elliott Wave script, or is something else going on? And then, of course, I highly encourage whatever discipline you use 2 or 3 tools, 3 or 4 tools, preferably no more than 5. I think 5's about max for me. But usually whenever I'm doing my market analysis or I'm looking for a trading opportunity, what I like to focus on are essentially 2 or 3 things, okay? I don't like to simply do one technique, like just simply Wyckoff or point and figure or the wave principle or just simply look at, CCI, commodity channel index, or whatever you may be looking at. I like to look at a couple of different things because what I'm essentially doing is I want to look at the evidence. It's all about evidence, okay? You want to be logical in whatever you do. You want to be the logical trader, the logical analyst. Now, another thing that I like about this price chart here is if you notice over here to the left, back in February and March of 2025, whenever we saw this move up, notice what happened with RSI. RSI moved up into RSI bear market resistance, which is right here, and then gave way to lower prices. Well, this is what we call RSI bear market resistance. And then conversely, what we have over here to the right, this is RSI bull market support. Okay, so we've come from under RSI bull market support, moved a little bit above it, pulled back in price, but we're still respecting RSI bull market support. And then, of course, I like to kind of marry that momentum signature up with an oversold stochastic, which is exactly what we have right now. So if we can indeed, moving forward, get back above the 30-period moving average, see the RSI move back above the 45-period exponential moving average, and then look for %K, %D to get back above 50, those would be three little levers, three little green lights, boom, boom, and boom, that would argue that wave 2 is indeed done in Pepsico and that this wave 3 advance again is beginning to take shape. Now remember, this wave 3 advance, it's not going to be done in 3 weeks. Most likely it's going to be something that takes 4, 5, or even 6 months.